Hi, everybody. I want to thank you for joining us today for this webinar. My name is Derek Wells. I am with My Time Card. Wanted to introduce you today to Trevor Smith, the co-founder of Always Clean. Trevor, give a little background on yourself as well as your company.
Yeah, thanks, Derek. So my business partner, David, and I, we actually used to work at a laundry company, and we were delivering mats, towels, and uniforms, and we would work all day at the laundry company. And one day David came to me and says, "Hey, my mother, she's moving out of her office, and she needs some help. Do you mind helping me clean the office?" So we go out there, we clean her office. She calls back a week later. Her cleaner had abandoned her. She needed us to help her clean her office again. And suddenly it became a theme, and we were making a little extra money. So we started cleaning her office over the course of, a couple of months, just to help her out because she couldn't find a good, reliable janitorial company that she wanted. And next thing you know, we started cleaning the office next to her office, and then the office upstairs from her office, just to make it worthwhile going out there. And we started doing this for a little bit of time, and sooner or later, one night of janitorial cleaning turned into 2 nights of janitorial cleaning, and then pretty soon that turned into 3 nights of janitorial cleaning. And by then, Dave and I were pretty exhausted because we're working 50 hours a week at the laundry company. We met a gentleman who was willing to take over, and help us out, and he later became our third partner. So we did that for a number of years. We actually started back in 1999, and by 2015, we actually had quite a major business going. Dave and I had both left the laundry company. I think I left in 2007. David left in 2009. And we were working full time on that. And so right around 2015, we had this need to build out these, collect our time cards from our employees, because we're using paper time cards and we're spread across 3 counties, and getting them was just a nightmare. So we actually created this software platform, My Time Card, that allowed us to go ahead and get all that information in. But anyways, I don't want to dive too much into that functionality. I want to talk to you guys about the labor ratio and why that's important, and how that actually became a very critical way for us to measure and manage our business.
Great, thank you, Trevor. And just for you folks out there, it is a pre-recorded webinar. So, but I want everybody to feel free to submit questions through our chat, and we'll be sure to answer those once the video is ended. So, hope you enjoy.
Labor ratios. What is a labor ratio? Why is it so important? And how can you manage them? These are the topics we're going to cover in today's webinar. We found that they are critical in the managing of our janitorial company, and I'd like to share some trade secrets, if you will, that we've learned along the way to make us somewhat successful, I'd like to think, and talk a little bit more about what we do in general to manage this stuff. Okay, so I don't want to bore everybody who already knows what a labor ratio is, but just in case you don't know what a labor ratio is, it's basically the percentage of labor out of the total amount of money that you receive. And why that's important is because if you obviously spend too much on your labor, more than you receive from your customer, you've got a big problem. And that's why labor ratio is a silent killer. Best practice is to monitor this labor ratio weekly. And when you do calculate the labor ratio, don't forget to add your tax and fringe. One of the things somebody told me a long time ago was that at the end of your life, if you were to add up all of your line item expenses, tax would be the largest line item of all of the expenses you would have had the entire life. So anyways, for most commercial cleaning operations where supplies are a minimal amount of your total input cost, your labor ratio should be between 40 and 65%. We call this the Goldilocks zone. So if you are in an industry where you don't upcharge for your supplies and they are costing you a lot, then obviously that labor ratio needs to be quite a bit lower. So I'm the CFO over here, and by definition, I'm a math nerd. So quick shout out to all fellow math nerds. Now, if you're not a math nerd and you understand all this stuff, just bear with me for the next couple of slides, and we'll get to the good stuff as to why. But basically, let's break this down. You've got 2 employees. Each work 7 hours, cleaning an office building twice a week. So that gives you a total of 28 hours per week worked. Each employee makes $15 an hour. So the unburdened labor is $420 a week for this team of 2 cleaning this office building. Your tax and fringe rate is 22%. You times that by the $420 of your unburdened labor, and that gives you $92.40 of that tax we love to pay. You add that together, 420 plus the 92.40, we've got 512.40. So that is your total labor. So start with that number, and let's take a look at what the customer is giving you. So your customer is paying you $3,500 a month to clean this office. You take that number, $3,500, you divide it by 12 months, you get $42,000 a year. That's a pretty decent contract, I'd say. You divide that by 52 weeks, and now you have $807.69. That is your weekly revenue. So let's take this and figure out the labor ratio. Now that you've got those base numbers in place, just a super easy calculation here. Labor cost, $412.40, divided by your weekly billing rate, which is $807.59%. That's the only tricky thing right there. Just make sure you hit the percent key. That will give you 63.45%. That $512.40 is 63.45% of the $807.59. And as you can see, you've just made it inside the Goldilocks zone, which is exactly where you'd want to be. Okay, you've got your labor ratio number, but why should you care? Well, this labor ratio is really your North Star metric. You should be following this through the entire life cycle of your account with your customers. You want to make sure that when you're bidding, that you're managing this metric, that you understand what it is. Don't be overly enthusiastic to close that new piece of business and end up with a labor ratio that is going to plague you throughout your entire time with that customer. You can really hurt yourself here. Now, there are opportunities where you may want to push that labor ratio higher because you're really excited or it's important for you to get the piece of business. But I think as you mature as a commercial cleaning company, and most of the bigger ones out there, if you're listening, the bigger one, you find yourself in the price quality equilibrium, which is a great place to be, and it should be a place where you're striving to get to. And if you're not there, it's a challenge. I'll probably do another webinar on the price quality equilibrium concept later on down the road. But once you have this North Star metric in place, just be aware of the creep. So let's unmask the elephant in the room, or the 800-pound gorilla, whatever you want to call it. We all are running our businesses day to day. We can get overwhelmed with the specifics of somebody not showing up, customer complaining about something, just a wide variety of issues that sort of bombard us, and we lose sight of the fact that the profitability needs to be measured and managed because we're too busy running our day-to-day business. That's why this metric is the silent killer, because so many businesses don't pay attention to this. So I'm going to do a little sidebar into a metaphor here, and I think it'll all make sense when I get back to it. It's more of a story. So my father was a behavioral psychologist, and he worked at the University of Utah as a professor as well. And what he told me one time was a true story, a scientific study about a phenomenon. Basically, it goes back into the history of Ireland, where landowners shared a common amount of land, and they would graze their sheep. And they knew that only a finite number of sheep could graze on these commons, or the entire commons would die, and all the herds would die as well, because they wouldn't have anything to eat. Nevertheless, each rancher seemed to feel that if they just added one more sheep, they would benefit immensely personally, and it really wouldn't make that big a difference to the entire commons. Well, since everybody followed this logic, eventually the commons become overgrazed and everybody loses their sheep. So the reason I discuss this is because the similar phenomena or theme exists with our employees. I found 99% of the employees that have ever worked for us have been incredibly ethical, hardworking, and genuine people. There's really just about 1% of the employees that end up taking advantage of you, and you usually discover they're a fraud and you deal with those employees in time. However, like the tragedy of the commons, your employees may not see how just a small benefit of time, minutes, can affect your entire organization. And this is why managing this labor ratio is so critical. If not monitored consistently, these deviations will destroy your profitability over time on a recurring job. Hourly employees, they just tend to creep that time up. Example would be an employee that is spending 5 hours on a job that should be taking 4.5 hours. After a time, this may move up to 5 hours and 15 minutes. And if unchecked, this could turn into 6 hours or more. And each deviation from that projected amount of time that you've budgeted for that account drives that labor ratio into the danger zone. And when you add the environment of quickly rising wages, you could be faced with a Titanic event. Now, the reasons for these changes can vary. Employees will often say things like, someone has asked them to do something extra, or the amount of time to do the job is unreasonable. A new employee will take longer to get the job done, and a supervisor will allow this knowing that there is some adjustment that will be necessary for training. Unfortunately, I have seen all too often the training time mysteriously becomes permanent time, and it doesn't really matter how this labor ratio disintegrates. It really doesn't care, and you will pay. So we've covered the what, we've covered the why, and now I want to jump into the how. How do you manage these ratios? So this is a spreadsheet that we use. We created the spreadsheet. I'm sure lots of other janitorial operators out there have similar spreadsheets. If anybody wants a copy of this, with all the cells formatted, I'd be happy to send it over. Just email it to me at trevor@myetimecard, and I'd be happy to send this over to anybody that's interested. So I'm going to just go through the spreadsheet rather quickly, I think, and explain to you what and how it works. So if we look at the top left-hand corner, that's our team. And that team is composed of the accounts that those individuals are going to clean. And then at the bottom, we have the names of the individuals that are going to clean those accounts. So it's set up in a calendar format. So we do our weekly calendar Saturday through Friday. And each of those days has to be recorded for how much time we budgeted for each one of our accounts. And so we do an actual versus variance, but more important is the ratio. You'll see that down in the bottom. So if you come over to the middle where it says bill rate, this is the weekly amount that each one of these clients is paying us. And when you get down to the weekly total, that will summarize the entire week. And as I mentioned in the beginning, it's best practice to manage these weekly. Now, the 2108 that you see there is actually 2 weeks. So this spreadsheet is managing for the entire payroll cycle. So the only thing that's tedious about this is when the payroll numbers are in, you have to punch them into the spreadsheet where the employee's name is or are, and they will calculate this spreadsheet out. To the right-hand side, you'll see the FICA, the liability insurance, the work comp, the unemployment disability, and that'll give us that lovely tax number that we were talking about. So when you go down on the right-hand column, you'll take all of the employees' hours. You notice that their wages are also next to their names, so it calculates the wage times the total number of hours they've worked in that pay period, and that'll tell you what each employee is receiving, and that will summarize the total number of that. We'll add the tax and fringe. That will give us our total burdened labor cost. And then that is then divided into the cell 2108, and that will give us our labor ratio. So again, it is a little time consuming to get this in, and that's why I mentioned that day-to-day operations can get in the way of this. If it's not a priority, then this will be a silent killer, and you may never know where these ratios are. So the Excel spreadsheet worked for us for many, many years. It was great. However, it was manual and it was time consuming. For us, fortunately, we had built a mobile employee cloud-based platform for measuring our time and attendance. And so the next logical step for us was to automate the labor ratio process, which is what we did about 2 months ago. We finished this part of the software. As you can see here, and I don't want to make a product demo out of this. So if you're interested in the actual product itself, you can email me at trevor@myetimecard.com, or you can just go to the website. But I'll give you a quick summary here. This is an account, Zern Wilkins. We can pick any date range we want. We can even drill down to the employee level. If you look at the bottom, the statistics that are important to us are budgeted hours, actual labor cost dollars, our quoted amount, and then there's that labor ratio, that awesome labor ratio thing that we're tracking. So we can track labor ratio over any time period, any team, any job. We can sort it. We're actually going to be adding alerts here in the next month or so. So this is a great tool, and hopefully you're measuring it somehow. You don't have to use our tool, obviously. Hopefully the webinar was informative, but we do have this tool, and we'd love to talk to anybody who finds this of any value. So that wraps up our webinar. I've got a couple of quick points here. Just to let you know, we got through this thing in under 20 minutes. So that was my goal. And also, I felt that this slide of Keela and Koa would help bring us out of the boring math world and into reality. Additionally, if you have any feedback, please email me at trevor@myetimecard.com, and I'll post a summary of all the comments on our blog. And if you include your website information, we'll create a backlink to your site. Thanks, and I hope this was helpful to everybody. Thanks, so welcome back live.
Yeah, thanks, Trevor. That was some awesome stuff. So again, what we wanted to do at the end of this is answer some questions that we got in our chat. A few that came up. So the first one here, Trevor, is why is 40% too low?
Yeah, great question. So typically we look at 40% as a low point. You're probably, I know this is strange, but you're probably actually making too much money. So you're actually in jeopardy of destroying your relationship with your customer. You may be, competitively disadvantaged when your competitor walks in there. And if you're like at a 20 or 25, it's pretty easy for the competitor to come in and undercut you on that one. And your customer's looking at you going, wow, you guys really, took advantage of us. That doesn't necessarily apply in all circumstances, but that's kind of our rule of thumb.
Great. So a couple of these look like kind of just standard janitorial questions, but okay. How do you figure your bid price?
Yeah, great question. So you've got to figure the bid price to begin to create these labor ratios. We like to do it twofold. So we start with the square footage. That gives us sort of a baseline, but we absolutely have to walk these properties. There's too many nuances in there. Is it a medical facility? Is it a huge amount of area that we know we can clean quickly? Like we typically don't clean cubicle farms. Our rule of thumb is that we don't move any of the items on somebody's personal space. And so you might have a huge amount of square footage and it's inhabited by dozens and dozens of cubicle farms. We're probably not going to do a deep dive and clean all those cubicle farms. So in that regard, we would match up the square footage that we're looking at, and we take a look at how many hours were projected. We literally break down the building in areas and calculate the hours it takes us to clean each area. A great way to do this when you're walking the site with a client is just say, hey, can I get a photocopy of your emergency evacuation plan? And they hand it to you there on the spot. Go back and create your bid from there.
Great, great. Couple more questions here. Just two more. How do I reduce complaints is a question we got.
Yeah, well, so that's different than the labor ratio, but a really great question. I would say if you want to have the biggest impact on complaints, make sure you always check the dispensers, specifically the soap dispensers. I think we actually made this an initiative in the company a few years ago. We were looking at complaints, and the dispenser complaint was just, epidemic. And after we focused on that dispenser complaint, we found the phone calls just dropped off. That would be one great takeaway. Just focus on those dispensers and you'll probably cut your complaints in half.
Great, great. And so we'll get to the last question here. But for any other janitorial questions, you may have, feel free to reach out to Trevor. He's got a vast amount of knowledge in the industry, and he'd love to share that knowledge with everybody. But that brings us up to the last question. What is the topic of your next webinar?
Great question. So I mentioned that early in the slideshow here. I want to do one on the price quality equilibrium. We're living in a time of difficult employment. It's hard to find people. Turnover is a killer, and maintaining your ratio with the price quality equilibrium is a concept that I think everybody can benefit from. So that'll be the next one. Hopefully in about a month or so. We'll see how the feedback comes from this one. And to that end, if anybody has any feedback about this, I'd love to hear that as well. It's trevor@myetimecard.com. So please send me any feedback that you think is pertinent to this, or as Derek said, any questions in general. Be happy to answer them.
Yeah, and so we'll end it here. Thank you so much, Trevor, for taking the time to do this. I think it was going to be very helpful for anybody out there that needs some help with labor ratio. Thank you.
Thank you. All right. Thank you,
Thanks,
everybody.
Guys.